Hello to all traders and welcome to another engagement with myself, David Kinley, and this is the NFP live trading session. So we'll get into all the big opportunities in the market that we've seen in the last few hours. I'll just be able to put my screen on. Here I am. Hello again to everyone that's watching. Thank you for joining me once again. We'll be joined by our special speaker, Daniel. He'll be along later on before we look at the markets and just have a quick look at what the opportunities are in the sense that are we going to get more of a big jobs number this time around? Are we going to be a bit worried that gold has not only hit record highs, but it doesn't seem to be slowing down anytime soon. So because of that, are we going to see a bit of a flip on the dollar as well? We've also got the chat open as well. Hello, Alaid. Hello, Nikhil. All good. Thank you very much for joining me. If you have any questions as we go along on any markets that you prefer me to look at, please feel free. We'll be looking at the general ones, the big ones that that will move the markets, the euro, the dollar, gold, the Dow, S&P, etc., as we go into our NFP journey. So without further ado, let's just have a quick look at the disclaimer before we go any further, just to make sure everyone is protected. So as you know, foreign exchange trading and investment in CFDs is highly speculative and may result in losses as well as profits. Foreign exchange and derivatives and also trading on any instruments at all in CFDs with Orbex is not suitable for everyone, and only risk capital should be applied. So it's very, very important. This webinar is provided for information purposes only, and no information contained herein constitutes solicitation for the purpose of purchase or any sale of commodity, security, or investment, nor should serve as basis for any investment decision. Orbex Limited does not guarantee the accuracy or completeness of any information or analyst supplies. So without further ado, let's just take a quick look at the numbers last time around. I won't stick to the presentation too much because we want to get into the platform and see what the charts are doing as well. So just have a quick look. We were surprised last time around at the 353,000 new jobs added. That was only supposed to be 180,000, which was quite a big jump. So the consensus this time around is 200,000, still a decent jobs number. Unemployment rate is expected to hold firm at 3.7%, but the unemployment rate did drop at 3.4% at some time a few months ago. So it is creeping up a little bit more than what we would want. But yeah, it is still okay. Let's say it hasn't jumped up to 4%, so we're still doing okay. And if we just take a look at this chart for the last few numbers, we are steadily keeping below 300,000, apart from last month's jump above 353,000 it was. So let's see if we can get a good jobs number this time around. It probably will be a bit lower this time. I don't think there'll be any big surprises in the market, but you know, you never know in this environment how it's going to go and what we're going to see as the jobs numbers increase or decrease. And just have a quick look at the inflation and interest rates. So interest rates remain fixed, but we'll go more into that with Daniel when it comes on. Sorry. So it is looking likely that the Fed has reached a peak on its interest rate hikes. It is looking likely that we will see more of a cut in rates in June or July as we head into the second half of the year. Possibly as we get into the next Federal Reserve interest rate decision this month, we won't really see any signs of a slowdown, but hopefully we will see a signal or find some signals in the market that will say what will be happening as well. Hello on the chats, welcome. As I said, any questions that you have as we go onto this NFP journey, please let me know. Just quickly finishing up on the annual inflation as well, that dipped to back down to 3.1%. So it is, when we got this double move to 3.7% in August and September, this was a little bit worrying because we got right down to 3% in May and June, and then we started to creep up higher. So if you see before that, we were collapsing on the inflation quite significantly from 6% to 5% to 4%, 3%. Then we started to creeping up to 3.7%. So that was a little bit of a worry. That's why the Fed is a little bit worried about cutting rates too early, because it's done 2 or 3 years hard work going through the pandemic, through the COVID-19 lockdowns and everything, to start cutting rates too early, and then inflation starts jumping. So I think they will probably wait until inflation nicely settles below 3%, closer to the 2% target that it wanted to. And then we'll probably start looking to see if price action will then again start moving a bit more to the downside. So without further ado, thank you for joining me once again. As I said, any questions you have as we go, please let me know. So we just want to take a look at a few of the charts that I've picked out. So I've got these on the daily chart at the moment. So I just want to see the vast movement of the euro, dollar, the gold, etc. So what we saw here for the majority of the back end of last year, you could say from December until the middle of January, we saw quite a move on the euro dollar, over 400 pips being shed. But now, as you can see, dollar weakness across the board, which has seen gold really start moving higher. And not only that, all of dollar's competitors really starting to move in the favor of their own. So they've really started to start building some momentum. So as you can see here, we've had a nice double bottom here for the euro dollar, just at the 107 handle. Now we're trading above the 109 handle. So over 200 pips being moved in just over a month. So is that going to have any kind of impact? Not even a month, sorry, just a couple of weeks. Is that going to have any impact? Because this V-shaped recovery now looks like it's nicely in formation for the rest of the month. So because the Fed has indicated that there's going to be no more stimulus injected into the economy, there's not going to be any more rates for anything. We are going to possibly rate hikes, so there's possibly see a bit of momentum towards the euro, Canadian dollar, sterling, etc. Nikhil, thank you very much. Gold, I know you like gold, so we'll get straight into that now. I was going to go on to sterling, but we'll go on to gold because gold, as you can see, wow. You know, a lot of traders were asking me, because they thought this last move to the upside here was a false spike. As you can see, the body of this candle, just zoom in so it's a bit easier to know what I'm talking about. The body of this particular candle here stopped. And obviously this was quite a bit of a spike here. So a lot of traders thought this was a false spike. And this was the true top. This was the true record high, roughly about 2072, 2080. Boy Canyon, yes, we'll look on the NASDAQ shortly. We'll just finish off on gold, and then we'll quickly look on the NASDAQ as well as the Dow and the S&P. Just want to quickly finish on gold. So as you can see here, not only has gold beaten the previous 2072, 2080 range, but it has also beaten the previous spike as well. So record highs on gold. Who would have thought it? Because when we started seeing this shift in upside candlestick movement, and don't forget this is on the daily chart as well. As you can see here, 1 2 3 4 5 6 7 8 progressive days of gold moving higher. And if we start from where it was, which was 2030, now at 20, was over $130 added on gold in under a week. It's just remarkable. Obviously, you've got the tensions in the Middle East really pushing. You've also got the Russia-Ukraine conflict really starting to continue, unfortunately, and get out of hand even further. This is really pushing up gold even further. And obviously with the Fed signaling that they will probably start cutting rates as well, this is just kind of spiral gold out of control. So three big reasons why we've seen quite a move on this safe haven yellow metal. And will we see an end in sight? Well, at the moment, there are no signals that we will see an end in sight. As I said, a lot of traders thought we'd hit resistance at this particular area, 2070, 2080. That broke through quite significantly, and now we have broken through the spike at this top here. So trading just above $20 to the upside. Will the NFP have anything to say about this movement and have some kind of correction? We'll have to wait and see, but it is actually very, very advantageous at the moment. So let's just quickly take a look, just moving on to the NASDAQ. Let me just quickly find it. So here we are with the NASDAQ. The last time that we looked on this, you know, after we broke through this V-shaped recovery, this was at the beginning of January. We've kept on moving higher and higher, and rightly so. You know, we've had such a good earnings season report as well. That's kept on pushing higher and higher. We have also had more of a move to the upside Just want to ask you if you can keep your questions in English. It'll be a bit easier for me because obviously I know some languages, but not all of them. So if you keep them in English so everyone can see as well, it'll be a bit easier for everyone. So on the Nasdaq as well as the S&P, we've seemed to have hit this record double top at the moment, and this is on the daily chart. Don't forget. So as you can see here, 18,340 seems to be a bit of a top at the moment, trading roughly about 80 points below that. Not too much of a downshift movement, but obviously if we do get a progressive jobs data in, expect the indices in general to start falling, because it means that the Fed will definitely start cutting rates sooner than expected if they see a growing economy. The non-farm payroll numbers are a big help for the Fed, because if they do get a progressive number in, then they will take action and probably start cutting rates, which would mean less money going into the economy and this will mean a bit of a damage to big companies as well that make up the Nasdaq and the Dow and the S&P. So expect a bit of a fall on there. But let's just go intraday. This is on the 4-hour chart. Let's go 1-hour chart. Just want to show you, this is very much a harmonic pattern at the moment. As you can see here, we've dropped down here. We are now rising roughly probably about 61.8%, I would think, of the Fibonacci. We've moved back down, but now we are starting to move back up again. So because of that, if this is a fully fledged harmonic pattern, we should start seeing a reversal now. We have seen a slight triple top, you could say, on the 1-hour chart, but we are expecting now, if the harmonic pattern does start happening, because harmonic patterns are reversal patterns, we should see price action start moving lower. But obviously the NFP is such a big fundamental news event that we could see this move even lower. So we'll see if that actually happens as well. So what else can we talk about? Let's talk about the dollar yen. Dollar yen's really starting to collapse as well. As I said, everything going out of favor for the greenback or the dollar, however you want to call it at the moment. And I'll just put this in because this V-shaped recovery was almost complete before we got some very heavy resistance at just below the 151 area. And because of that, now we are trading just below that particular area. So just about 100 pips short of hitting this V-shaped top, this double top, you could say, before we got found heavy resistance on this particular instrument, and price action started moving lower. But not only lower, we've had actually over 300 almost 350 pips fall quite significantly. So that's moved quite progressively to the downside. But as I said, there's been dollar weakness across the board, especially with gold moving higher as well. So I hope that's answered your questions at the moment, but please keep them coming. We'll keep on talking about the charts until our guest speaker Daniel arrives shortly. Let's look on sterling as well. As I say, these are all the daily charts at the moment. I'll just zoom in a little bit further for you. So at the moment, as you can see, we are now seeing a very harsh consolidation for sterling, but it has broken the recent top that we saw, and we are trading just about 30-40 pips to the upside now. So it's a nice candle that we've seen today. Let's just look on the 4-hour chart so we get a bit more of a progression. As you can see here, very, very bullish at the moment. And we're just seeing now where price action can lead us. So back on the daily chart, as you can see, let's just zoom out. And if we just take this, for example, we saw such a collapse at the end, the mid to the end of last year. This was Q3 and Q4 pretty much, before we saw quite a rise just before the new year, and now heavy consolidation. So this is something we're going to keep an eye out on, especially on cable, because when cable is moving like this, it usually means that the euro dollar is moving a little bit in the same direction. Euro dollar just has a bit more to make up because it had such a collapse against, the euro has to, because it had such a collapse against the dollar in the last couple of months, that it has a lot more to make up. So if we just take an example here, you can see 400 pips. And now we're just looking to see if that's going to happen to start moving higher as well. Okay, So dollar Canadian as well. We do have, I believe, some Canadian. Yes, we have unemployment rate as well as employment change at the same time as a non-farm payroll. So that could actually be quite a good currency pair to trade on, because, or to look out for, because we could have some double movements if we do get progressive Canadian dollar news and not so good non-farm payroll news. Again, though, moving against the loonie, against the dollar, $150 there. And I can see Daniel is waiting. So I'll just get my headset so he can hear me. And I'll just invite him in. This is why I need to wear my headset as well. Hi, Daniel, can you hear me?
Yeah, I think so. Hopefully mine's working now. I left
Yeah,
my headset and forgot it, and then I had to go
it's
to the restaurant finding it.
it's always a bit 50-50 when we connect. We never know what to expect, right?
Yeah, that's right.
Exactly. So I was just talking to our live traders about just how much gold has spiraled out of control, you could say, and how much the dollar has kind of been on the back foot for the last couple of weeks. Is
Yeah.
this due to the Fed's signals of they most probably are going to cut rates sooner rather than later?
Yeah, that seems to be the thing. Well, it seems like the bounce really happened on the February 29th, because the extra day of the month for this year. But that's when
Yeah.
the PCE deflator came out, and then
Mhm.
it was kind of because it came in line with expectations. It's kind of surprising that you get this sort of large move, but it's sort of like up until then you had this series of data points that kind of said that maybe the economy isn't doing so. I mean, the economy is doing so well, good, but then
Mhm.
inflation might be getting out of hand. And so then after that, it's sort of everything came in line as expected, and so then it's like, oh, so maybe actually the inflation is going to come down, and the Fed is going to start cutting. So that's kind of like my suspicion that it happened then, because you see, then it was a week later that Powell did his testimony before Congress, and he
Yeah.
kind of basically said everything that he's already been saying, but then the market interpreted it as positive. So it seems like, I guess, through February, there was this bit of like, are we really sure that inflation is going to come down? Are we really sure the Fed is going to cut? Because
Yeah.
and that's when we went from 6 rate cuts expectations to 5, and then there's a little period when they're like 4 maybe, and then now it's gone back to kind of like return to normal. So there's like a bit of doubt, and then it seems to be coming back to normal. That seems to be the thing that's going on.
Exactly. So basically, this 29th of February started it all. So we'll have to wait
Yeah.
another 4 years before we get quite a big bounce in the market again.
Yeah.
So with that being said, Daniel, I mean, the next interest rate decision, the next meeting, I believe, is this month.
Yeah.
We'll probably get
Not
more of a
this week, then the week
signal.
after, I think.
Yeah, I think it's in a couple of weeks. So we'll get more of a signal from the panel that they're probably happy with the way things are
Yeah.
going.
Sorry.
Inflation is not at 2%, but it is dropping still nicely, let's say, steadily, not as much as it was doing before, but steadily. And, with the progressive job numbers we had last time, around 353,000 new jobs, it's basically like a green light for the Fed to start preparing, would you say?
Yeah, that seems to be the interpretation.
Yeah.
The thing, I guess, what everyone's really waiting for now is what's going to happen with the jobs numbers, and
Mhm.
then also we had that thing last month where inflation was still a little bit hot, but then the PCE wasn't. So they might really put more focus on the PCE instead of inflation again this month, because, well, the Fed tracks PCE more than they track the CPI. So it could be that next week's inflation number is, well, probably the market will react to that and then react again to the PCE that's going to come out at the end of the month. Uh, but the Fed is going to meet before the PCE data comes out, so they won't have that information. So basically, they're going to
Yeah,
make the decision based on the information that they already have, plus what's going to happen next week.
exactly. Yeah.
Right?
I
If I got
mean,
the calendar right, yeah.
yeah, we have to get Canada's right first. But is it a bit surprised that the dollar's lost a bit of momentum? I mean, I was looking on the euro dollar chart and all the other dollar charts, and the main competitors for against the dollar, they seem to be kind of coming back now. I mean, we had such a progression of the dollar in the last few months, but since the last couple of weeks, you can say it has actually fallen behind quite significantly.
Yeah, there seems to be the thing about, well, also if you look at the yields during that period of time,
Yeah, and the
it
yields.
also
Yeah.
went down. And so then, of course, if interest rates in the United States aren't as attractive as they were before, then people are going to
Mm.
be looking around for putting their money into another currency. And also on Thursday, the ECB with their rate decision, it was kind of everything was in line. They also cut their forecast, but it was sort of like the comments from Lagarde that sort of
Hmm.
kind of implied they were a little bit more hawkish than initially anticipated, though.
Yeah.
It seems like the market was still pricing in that there was going to be a rate cut in June, and then after that, they're still pricing in a rate cut in June. But it just sort of like it ended up pushing the yields up a little bit. I guess they're a little bit more sensitive to the kind of rhetoric used or something like that. So that ended up helping the euro a little bit more. And so the euro is the one that has is the largest component of the basket. I think it's the majority. I don't
Yeah.
forget the exact amount from the component. So if you see the euro getting a little bit stronger, then the dollar by comparison is going to end up looking weaker. And then of course you have the yen. We got stronger. It was
Yeah.
last week because you had all this talk going around that or rumors that the BOJ is finally going to get around to doing positive rates.
Hmm.
But then of course that's again rumor because they had that thing previously, and then every time it sort of gets shot down because Wada comes out and goes and says, well, actually no, we're going to be easing, and then you get the fluctuation. So far he hasn't come on to say that, so maybe they're actually going to go through it this time.
Yeah, I was just going to touch upon that. Like, with the major central banks around the world, do you think it's pretty much that they've reached their peak of tightening now? It is just a case, literally, of okay, let's see how the data is for the next few months, and then we can start planning on cutting. I mean, it's not just the Fed, is it? It's got to be the ECB, the Bank of England, the Bank of Japan. They've got to kind of, I think if one of them starts doing it, one of them goes, they'll all
Yeah,
probably start
exactly.
following.
Yeah, the thing to be the thing is they don't know who's going to be first.
Exactly. Yeah. I think
So
everyone's just kind of waiting. Okay, let's see what they do. Let's see what they do, and
yeah.
hiding behind the covers.
Well, they kind of
Waiting.
had that problem last year. I think it was the Bank of Canada went first with a pause, and then it
Yeah.
didn't work out, and they had to start going tightening again. And so then never. Well, I guess that led the Fed at least to keep going until they were really sure about it. And now they're
Hmm.
probably going to be extra cautious because
Yeah.
it doesn't cost them so much to over tighten as much as it costs them to start loosening early. So I figure it's more likely that they're gonna like if everything points to a rate cut in say June, they might say, well, we'll just wait one more month just to be on
Yeah.
the safe side or something like that.
Yeah. It's pretty much expected. I just wanted to quickly pick your brains before the NFP. We've got just over 5 minutes left. With the US indices hitting record high after record high, slight correction, then record high, slight correction, record high. Now if the Fed does start cutting significantly, could the indices start dropping because obviously there'll be technically less stimulus injected into the economy, and could we see a bit of a major correction on indices?
Yeah, that's kind of the thing. Is that almost every time that the Fed does this, where they go and raise rates,
Hmm.
and then they pause, they start cutting, but it never, no, not never. It's kind of rare for it to go down slowly afterwards. It's like
Yeah.
the Fed tightens up, and then well, a lot of economists like to say that they over tighten. Then there are people who defend the Fed who say that they don't. So
Yeah.
to kind of avoid that debate a little bit, but the thing is they go for a period of a few months, they'll cut rates once, and then that gets followed by some kind of market crash because there's over tightening. So that's the same thing that happened in 2018. They ran up
Hmm.
the rates, and then they cut back once, and then of course you had the crash in 2020. The same
Yeah.
thing in 2008. They ran up rates, and then you had the great financial crisis, and then the same thing ahead of the .com. So the thing is, if the Fed does manage to start slowly bringing down rates and does what they say they're going to do, which is at most 3 rate cuts over the course of this year, then that would be kind of extraordinary. The thing is, it's really easy to predict that a recession will happen, because a
Yeah.
recession will happen. The question
Mm.
is when, and that's always been the kind of the problem is there going to be a market crash? And there's been all that worry about that all through last year. We were talking about it quite frequently. It didn't happen,
Yes.
and now that everyone's sort of like saying, well, I guess it's not going to happen, then you still have the chance of it happening, because this is kind of like, well, one, you also have the yield curve inversion. The yield curve usually, no, always a de-inverts. It goes back to normal before you get the
Mm.
market crash, and that's usually often the Fed will cut rates once before you get the market crash. So historically speaking, if the Fed does cut in June or July, then September, October, you would expect to see the market go down. A lot of people kind of point at that, and also I've done it too. I've mentioned it as a factor, is that you have the election year. Usually, the market won't. There won't be a recession in election year because the government's putting out so much money, because politicians want to grease the wheels and make sure that they're in good with the voters.
Yeah.
But it is possible that if there is the conditions for a recession, it can break through that, because that's what we had in 2008. 2008 was an election year, and you had the great financial crisis. So,
True. Yeah.
it does incline the balance to saying, okay, maybe we might skip the recession, but if there is the conditions there, it doesn't make it impossible. That's the thing.
Yeah.
So,
True.
keep your stop losses in line, so to
Exactly.
say.
Yeah. I remember George W. Bush probably thinking to himself, thankfully I'm out of the office for sure in
Yeah.
2008. Yeah. So, I mean, with that being said, obviously the earnings season as well has been so progressive for a lot of indices. We've got Nvidia as well. I think they're the third most valuable company in America or something like that now. They've really been pushing the indices higher as well. Could we see a bit of a, retracement in profitability for these big companies in the next earnings season?
Oh yeah, that's the thing, because they've been growing so fast,
Yeah,
and
exactly.
at a certain point, you just run out of customers,
Yeah.
is kind of thing. So they can't keep growing at that rate. But so the price keeps rising at the same rate that's been rising before. Then eventually you're going to end up with a mismatch, and you're going to have some kind of correction. And
Yeah.
so the thing is, who's going to get in ahead of the correction? Because it happens, of course, every 3 months when they report their earnings. Is
Mm.
it going to be this month? Is it going to be this time? Is it going to be this time? Is it going to be this time? And each time you get the fear of missing out, because last time, if you didn't get in on Nvidia and then the price went up, you're gonna be like, well, I should definitely get in this time. And this time it might be when it reaches saturation point, because
Exactly.
there's a certain amount of demand, and then also because the price of chips are so high,
Hmm.
there's an incentive for other companies to get in and start increasing manufacturing as well. Even though Nvidia is pretty much dominant in the sector, there isn't anyone that has any kind of major competitive advantage. But you never
Hmm.
know, at some point TSMC might come out with a new chip, or AMD might get its act together and also come out with a new chip, even though they're partnering with Nvidia. And then of
Hmm.
course Intel has been the big
Intel as well.
laggard.
Yeah.
They can
Yeah.
come out at any point. Maybe you would, like, they used to be the leaders in chips, and now they're
Yeah.
they're all really far behind. So I don't know.
I was going to say, yeah, maybe a few of these companies have taken note and thinking, wow, if Nvidia can come out of nowhere the last few years and just, become such a powerhouse in the
Yeah,
field, why can't we? So there could be, like you said, it could be a bit of competition in the next couple of years for Nvidia.
but yeah, I think Nvidia get up to about a $3 trillion valuation. So if we're talking about
Yes.
that amount of money, you
Yeah.
can really do a lot of stuff if you throw out a couple $100 billion at something.
Of course. Yeah. They can even probably tell people to produce more babies to have more customers in the future. So
True.
something for the future to think about as well.
Yeah, it's
Okay, Danny, just over a minute to go. Also, we've got at the same time, this happens every now and again, we've got unemployment data coming out of Canada as well.
right. Yeah.
So I just wanted to touch on the employment rates at
Mhm.
3.7% in America, with the participation rates as well. This is quite a big factor, isn't it? It's not just the NFP when the news is released.
Yeah, what they're really focusing on is labor force tightness, as it's called,
Hmm.
which is how easy it is to find another job, and that's going to be whether or not it's going to push up the inflation in prices. So if people, it's hard to get a job, then people are not going to negotiate as hard to get a higher raise, and so then
Yeah,
you're going to have wages not going up so much, and so you'll reduce the inflationary pressure. In Canada, it's a little bit different because their economy isn't doing as well as in the United States, so
that's right.
their
Yeah.
their unemployment's been creeping up. So for
Hmm.
them, it'll be probably again the Bank of Canada might be able to lead here and be the first or one of the first to start cutting rates, even though at the last meeting they were still pretty insistent that rates are going to stay high for a while. So I don't know, maybe it'll be the RBA. I don't know. It was probably going to be one of the smaller central banks are going to be the ones that are the canary in the coal mine as usual.
Yeah, that they start. Yeah, yeah. I was just been checking the unemployment rate for Canada is 5.7% versus
Yeah,
3.7 for America. And if you think Canada's got probably a bigger landscape, it's
yeah.
quite worrying for that. Okay, Daniel, just waiting for the NFP numbers to come in now momentarily. We'll
We'll
just
see what happens in the chart if there's a sudden move, and we can kind of guess
Yes,
what happened.
exactly. We can kind of guess as what happened. Yeah. Okay. Progressive dollar at the moment across the board. Let's
So
just
that
see.
means kind
So,
of a beat, probably.
275,000 new jobs added versus the
Oh yeah,
consensus of 200. So, still a progressive. Okay, it's not as big as 353,000 last time around, but
yeah,
above the consensus of 200,000. So 275,000 new jobs being added. So we should see a bit of a spike on the dollar. And I think it's just pretty much been and gone because if we look at cable, for example, there's been a spike, but now it's kind of like fully
yeah.
retraced.
It's being offset probably by the average hourly earnings, which are lower
Yeah,
than expected. This is one of the things about NFP because it comes out of so many components. You can get an initial move on one number and
that's
then a
it. Yeah.
correction. What's that
Ah,
happen?
yes.
Oh,
Unemployment
yeah,
rate has
right,
jumped
yeah,
by a point two, so 3.9%. That's not so good uh, for America.
yeah. That would mean
Yeah,
that there's more demand, and that would push that would kind of explain the average hourly earnings because if there's more people looking for work, it's going to be
yeah,
harder for them to demand higher wages. And there might
yeah.
have been a revision to the prior number that also can also pull
It
it
looks
back.
like there is a revision, yeah. But I mean, gold is flying at the moment too. It's added another $10, so pushing up to 2,180 at the moment. That's
That's
just
a new record, isn't it?
phenomenal. Yeah, yeah. Well, it was a new record a couple of days yesterday when it went above 2,143, but now
Right.
it's close to 2,180. Unbelievable. That's
Wow.
uh, that's another string in the bow of the progression of gold. That's for sure. So basically, it's pretty much been ignored that the NFP has added quite quite a nice jobs number. We are seeing quite a big fall on all of the forex pairs. Dollar yen as well, progressively falling. I was just
Yeah.
saying to the viewers before you came on air, it's fallen almost 400 pips in just a couple of weeks. Gold has jumped over $120 in 6 days, and it keeps on pushing higher. So, is I mean, what's happening? Is it just a case of the geopolitical tensions around the world, the Fed starting to signal tightening for sure? It can't really go on for too much longer, saying we'll have to look at the data, let's see how it's going. We'll have to look at the debt. It has to take action sooner or later, right?
Yeah, yeah, I think that's where you really nailed it because it's like saying, "Well, we're waiting for the data, waiting for the data." Okay, well, now you got
Yeah.
a bunch of data. What are you going
You
to
got
do?
a bunch of data, yeah, for the last year or so,
Yeah,
especially since inflation's been dropping quite significantly from 9.1% it was at the summer of 2022, I believe, and now it's just above 3%. So
yeah.
it's they've done their job, you could say, the Fed. They have, even though people did think they were progressively raising rates and thinking, oh, 75 basis points at a time, what's going on, but they have actually tried to get their target sooner rather than later.
Yeah, it seems to have actually really worked with what the Fed did by being more aggressive because you compare it to the UK, which the Bank of England wasn't as aggressive. They even started sooner, but they were slower in
Yeah.
actually raising the rates, and and they had much higher inflation than the United States did, or comparatively to the European Union. The European Union also has like a similar economic situation, particularly with the energy pressures and such.
Mhm.
So it seems like yeah, you could probably say the Fed is done is done what it intended to do in bringing down inflation.
Yes, that's right. It's done what it intended to do, because if you think about the fact that, like you said, the ECB, the Bank of England, was slow off the mark. They started picking up the pace, but obviously inflation has dropped a bit quicker for the American economy as well. So it has worked out. Just quickly have a look on the main chart. So the euro dollar, it's had a bit of a spring of just over 50 pips, but now it's pushed up towards 110, but now it's just kind of plateauing and retracing back to where we started. So it just seems to be a bit of a spike of, we've had progressive job numbers, but the unemployment rate's quite high, and then it's just kind of
Yeah, I think it's kind of like evening out, because
evening
everyone's
out.
sort of like,
Yes.
there might be like a, okay, let's wait for the CPI next Tuesday, kind of thing going on, because you have everything pointing at this. Well, several things are pointing in different directions. Like you mentioned, there's the correction lower for last time, plus you had the beat now. Then you have the labor force participation rate went down, but then you had the unemployment rate go up. So it's like these things like lots of cross going on there. So
Exactly.
there probably might be extra volatility going around maybe for a little while longer, and then it might catch on to finally go on to a particular direction.
Yeah, it seems to be at the moment. I mean, indices as well, not really moving too much, but like we said, if there's a signal that the Fed is going to cut, we could see. I mean, if we look on the daily chart for the Nasdaq, let's say, for example, I mean, it's just been progression after progression. Even though we did have a couple of worrying moments where the correction did dip a little bit further than what we thought, it's just hit record high after record high. So would you say from now into the next earnings season, we could see a little bit more of a downturn? I mean, it's not that far from the next earnings season, actually.
Yeah, that's the thing about fourth quarter earnings season. It's really long.
Yeah, exactly. So, I mean, with earnings season coming around again, is it something to keep an eye out for not only stocks, but for indices as well?
Yeah, probably. The thing is, as far as the companies are concerned, you probably won't have any significant amount of as a comparative amount that you have with earnings season. So it's like you get earnings season, so now you have pretty much you understand where all the companies are financially and economically. So you would kind of get the same trend going up until we get to the next earnings season.
Yeah.
And so then we'd probably be like, there might be a lot of real focus on the first companies that report. So it's going to be the banks, which would be, I think, like the 14th, 15th of April or something like that. Then you could see the market suddenly move again, especially
Yeah.
because this earnings season, it was sort of like a holding pattern. They're sort of like, well, we're going to go, the earnings aren't going to be down, are going to be down a little bit, because it's the winter and the Fed had just completed its raising rates. But going into this first quarter, things should improve because you get the coming of spring. You're going to get the expectations that the Fed's going to be cutting. That's going to help improve the credit conditions. And so there should, if the Fed has been depressing economic growth as much as everyone thinks it is, for the first quarter earnings, there should be a rebound. And so if you don't see that rebound, particularly in the big banks, then you might get a bit of a correction. But in terms of the stock markets, you probably should have sort of like a general momentum trend in the current direction, as long as something surprising doesn't come along, like the inflation rate pops up, or the Fed goes out, it comes out to be especially hawkish,
or a recession.
Or a recession. Yeah.
That could put a
Yeah,
spanner in the
that
works.
always pops up out of nowhere. You're never really expecting it.
Exactly. Okay, that's great, Daniel. Well, what we can say, quite an eventful NFP this time around. Another record high for gold. We're seeing indices trying to push for another record, which they probably will get there eventually, and quite some big moves on the market. So, yeah, thank you very much for joining me again, Daniel. It's been quite progressive, quite interesting, and
Yeah, quite a big movable day, shall we say?
exactly, definitely. So, yeah, thanks very much for joining me again, and
Yeah,
we'll
thanks for
catch
the
you.
invite.
No problem, and we'll catch
Yeah,
you at the next one.
take care.
Okay, thank you.
All right,
Bye for now. Bye, Daniel.
bye.
Bye. Okay, everyone, that was Daniel, our special guest speaker. Thanks again for him to join us. And yeah, let's just take a look, recap on the charts. So Wow, what a NFP it has been. So at the moment, we're just seeing where price action will start moving. As you can see here, like we said, 50 pip move on the euro dollar. It's just starting to build up a little bit more now. So is this 110 area going to be breached? I'll just point that out on the chart so it's a bit easier to see. So not that far away, just under 40 pips and sorry, under 30 pips. And it's just looking likely that it will probably reach this particular area. But 110 is such a psychological area. Are we going to see heavy rejection there? We'll have to wait and see, but very, very exciting. Dollar Canadian, again, 50 pips approximately moving, but now moving more in the favor of the Canadian dollar. We have digested what the market has sent us. But if we just look on the last big moves, we're seeing quite a nice support coming into the market roughly at the base of the last full candles. So 33.80, just about 40 pips away there as well. So that's quite progressive. Nasdaq as well. While we're still on the air, please let me know if there's any markets you want me to look at. Nasdaq, that's on the daily chart. We'll probably see another move. Let's just go on the 4-hour chart because I want to, sorry, the one hour chart. As you can see here, nice firm double top there. We're seeing now possibly that's the top that we're seeing, and we could possibly see more of a downturn on the indices, but it might just consolidate for now due to the fact that it did actually have a rejection there. So, very, very good. We'll leave gold for last because it's quite a lot to talk about. Just look on the pound. As you can see here, we're just looking on the daily chart again. The last time we had this level was right back in August. So that's like a 6-7 month high at the moment. So very, very progressive. Just go on the weekly chart just to have a little bit of a move there. So a nice firm double top on the middle to early area of Q2 last time around. And we're just seeing now that price action is just under 200 pips away from testing that area. So not too much in it there. Just have a look on the dollar yen, progressively going lower, but it is looking likely that we could have more of a support around this area where it's falling into, probably about the lower end of the 146 area. So back onto gold. Let's just see. Wow, it is really pushing. It's moved over 2180 and now it's starting to move even further higher. So if that's going to be the case, we'll have to wait and see if we're going to have more of an upswing in the gold, or will it have more of a downturn? Very, very interesting stuff. If you're trading on gold, be careful. Obviously, we could have some, it is very volatile at the moment, so we could have some swings in the yellow metal. But again, what a performance it has been for the yellow metal safe haven, really starting to push even further. And will we get to 2200 by the end of today's trading session? We'll have to wait and see, but it is looking more likely than not we will have more of this bullish rally at the moment. So that's all from the NFP live this time around. Thank you so much for joining me. It's been a real pleasure talking to you. And as I said, any of your comments, please feel free to email me, connect with us at Orbex, and we'll be able to chat one-to-one about any of your trading decisions, where you want to go for the rest of the year, and what you're looking at as well to trade on. I mean, what inspires you, what interests you. Gold is interesting me quite significantly at the moment. So we're just waiting now to see if that's going to have any more bearing on where the market's going to go. So thank you very much for joining me, and we'll see you again next time.